Okay, so you want to own a real estate business in Dubai, not a property. The business that sells the property. The glass office in Business Bay. The logo wrapped across the back of a Range Rover. The agent in a fitted suit filming a reel with the marina behind him. It looks like the easiest money on the planet, and on paper it is. According to the Dubai Land Department, brokerage commissions in Dubai reached 13.59 billion dirhams in 2025, up 31% in a single year. Then you read the next line of the same report, and the floor moves. That money came from 96,440 broker-led transactions, split between 32,294 registered brokers. Divide one by the other. The average registered broker in Dubai closes about 3 deals a year. That's it. 3 deals, in the hottest property market on earth. So before you sign anything, lose the myth that this is a property business. It isn't. It's an advertising business that occasionally touches property, and it is about to bill you accordingly. So let's go shopping. At the cheap end of the catalog is the version that isn't really ownership at all, which is simply becoming a licensed broker yourself. You sit through the Dubai Real Estate Institute training, 4 or 5 days, roughly 2,000 to 3,500 dirhams. Then the RERA exam, which costs about 3,200 dirhams if you hold a degree and up to 15,750 if you don't. Read that pricing again, because it tells you how this city thinks. The less educated you are, the more the exam costs. All in, with the card issued through the Track-EC system, budget somewhere between 6,200 and 8,800 dirhams, and add a renewal every 12 months. What you have bought at this tier is permission to earn commission for somebody else. One shelf up is the license itself. A free zone shell with no office and no staff runs about 21,000 to 30,000 dirhams. A mainland brokerage, the kind that can actually work the secondary market properly, means a trade license from the Department of Economy and Tourism at roughly 12 to 15,000 dirhams. A RERA activity registration at 5,020 dirhams, which is 5,000 plus a 20 dirham knowledge and innovation fee. And a physical office with an Ijari tenancy contract starting around 20,000 dirhams a year. A hot desk in a business center will not satisfy the regulator. RERA wants a door with your name on it. Year 1, all in, most honest setup agents will quote you 20 to 35,000 dirhams for the bare structure. Above that sits the real thing, a furnished office, a sales floor, a CRM, an accountant, and a few salaried humans. 300,000 dirhams and up before you have listed a single apartment. And then there is the top of the catalog, the tier you cannot buy off a shelf at all. Better Homes, trading in this city since 1986. FAM Properties, Allsop and Allsop. House and House. Nobody sells you those for a license fee, because the license is worth nothing, and the roster is worth everything. Which brings us to where you actually buy. The new build route is almost insultingly fast. Trade license, RERA registration, broker cards, and you can be legally selling Dubai real estate in a matter of weeks. That speed is also the problem because it applies to everyone else too. By the end of 2025, the Dubai Land Department counted 9,785 registered brokerage offices in one city and 13,083 brand new brokers registering in that year alone, a 38% jump in new entrants. You are not entering a market, you are joining a queue, but you're an experienced businessman and you don't fancy queuing, so you look at the secondary market and buy an existing firm. Now you're buying something real, an office registration number with history, a team already carded, portal contracts already negotiated, and, if you're lucky, live relationships with developer sales teams. What you are paying for is the pipeline. The license takes 3 weeks. The pipeline takes 3 years. And then there is the distressed route, which after the first half of 2026 has become a genuine aisle in this shop. Brokerages that hired hard through the boom, locked in annual portal packages, and then watched their deal flow evaporate, are quietly for sale for very little. Here is the catch hiding inside that bargain. The portal contract you are inheriting is a liability, not an asset. The agents can walk out on Thursday and take the pipeline with them, because the pipeline lives in their phones, and any complaints or advertising violations sitting against that company in the land department system follow the license, not the previous owner. You are not buying a discount. You are buying somebody else's unpaid bills with a company name attached. Speaking of which, your first bill. Day 1, before a single client has called, you owe the trade license, the RERA activity fee, the Ijari on an office you barely need, the establishment card, and a residence visa for anyone you sponsor. Then a broker card for every agent, 6 to 9,000 dirhams each, renewing annually at 2,500 to 4,500. Then the big one, and this is the item nobody warns you about. In Dubai, you do not advertise property, you rent access to buyers. Property Finder and Bayut together carry the overwhelming majority of residential listings in this country, and individual paid listings run from around 500 to over 2,000 dirhams each, with agency packages that climb into tens of thousands of dirhams a year and keep climbing every time you want premium placement. One documented downtown Dubai campaign spent 60,000 dirhams on Property Finder and 45,000 on Bayut. For a single project, think of the portals as the toll booth on the only road into this market. You pay the toll to enter, and you pay it again next month, whether or not anybody was in the car. Then the compliance layer. Every advertisement on a portal, on Instagram, on WhatsApp, on a billboard needs a valid TRAC-EC permit number. The Land Department's published fee for a standard advertising permit is 1,000 dirhams plus 20 dirhams in knowledge fees, and the permit expires with the listing. Skip it, and the penalty starts at 50,000 dirhams per violation and escalates, with listing removal and license suspension available to the regulator if you make a habit of it. Add a CRM at 300 to 500 dirhams per agent per month, an accountant, and corporate tax registration, where simply being late carries a 10,000 dirham penalty. Run a 10-agent shop, and your fixed annual cost lands somewhere around 1,000,000 dirhams before you have paid 1 dirham of commission to one salesperson. Which gives us rule number 1 of the Dubai brokerage business. Your costs are contractual, and your revenue is optional. So how does the money actually come in? On a secondary sale, the standard is 2% of the price, plus 5% VAT, and in most cases the buyer pays it. On a rental, it's 5% of the annual rent, paid by the tenant. And on off-plan, the segment that made up roughly 70% of Dubai's transactions in early 2026, the buyer pays you nothing at all. The developer pays you. That's the reveal, and once you see it, you cannot unsee it. You are not a broker. You are an outsourced sales channel for Emaar, Damek, Soba, and Binkati. And your customer is not the family looking for a 2-bedroom in Jumeirah Village Circle. Your customer is a developer's sales director with a launch target. Which is exactly why developers have been quietly changing the terms. Consultancy analysis reported in The National in late 2025 described standard project commissions of around 0.3 to 0.5%, reaching about 0.8% on high-end launches, increasingly paired with fixed salaries and targets rather than large one-off percentages. Big developers release those commissions quarterly, tied to the buyer's money actually clearing, and where there are post-handover payment plans, the commission can be deferred 12 to 24 months. Your landlord wants rent in January. Your revenue arrives, maybe, in stages, sometime after the buyer's third installment. So the metric that decides whether you live or die isn't price per square foot, it's cost per closed deal. Bought portal leads convert at something like 1 to 3%, while properly nurtured leads from your own network convert at 5 to 10%, which is why the good operators quietly hate the toll booth and spend years trying to build a road around it. And now the arithmetic that reframes the entire industry. In 2025, Dubai recorded around 682 billion dirhams in property sales. The Land Department charges a 4% transfer fee on registered sales. Multiply it out, and the government's cut on transfers comes to roughly 27 billion dirhams, about double the 13.59 billion that every broker, every office, and every marketing budget in the emirate earned between them. The Land Department takes no listings, runs no portal ads, and sponsors no visas. It just owns the register. That is the best real estate business in Dubai, and it is not for sale. Which brings us to the graveyard. Start in 2008, when Dubai prices fell by roughly 40 to 50% in some segments. Dubai World announced a debt standstill on the 26th of November 2009, and Abu Dhabi stepped in with around $10 billion of support. Brokerages did not slowly decline, they vanished, because commission income is a function of volume, and volume dies long before prices do. For scale, in 2014, our era's then chief executive, Marwan bin Galaita, described a market of just over 5,000 agents and a few hundred firms. Today, it is 32,000 brokers and nearly 10,000 offices. The lesson: you are not exposed to property values, you are exposed to how often people transact. Then 2026, which is the case study you cannot ignore. Following the outbreak of regional conflict in late February, Reuters reported in March that Goldman Sachs put the total value of completed transactions that month at about half of February's figure, while the median transacted price was down only about 3% year-on-year. Emaar shares fell more than 26% on the Dubai Bourse in the same window. Better Homes chief executive Richard Wayne told the company's quarterly webinar that their own new deals dropped by roughly 70 to 80% during the acute weeks of March and April, with second quarter market volumes around 34,800. down 31% year-on-year. Knight Frank's Faisal Durrani put citywide sales volumes down 13.6% across the first half. Prices held, deals didn't. And your office rent, your portal contract, and your broker card renewals did not fall by 70% to keep you company. The lesson. In this business, the crash arrives in the calendar before it arrives in the price. Third grave, and the stupidest one to end up in. In April 2022, RRA fined a brokerage 50,000 dirhams and suspended 9 of its brokers over cold calling violations. Fake or unpermitted listings carry that same 50,000 dirham starting penalty, doubling for repeats, and the UAE public prosecution has confirmed that false or misleading property advertising can draw fines from 20,000 up to 500,000 dirhams. The lesson: the cheapest lead you can generate is usually the most expensive one you will ever pay for. So let's calculate how much you'll actually earn. 10 agents, 1 office, 12 months. In the optimistic scenario, you go heavy on off-plan. Every agent closes 5 deals, and you finish the year at 50 transactions. Average unit 2 million dirhams, blended effective commission 4%, so 80,000 dirhams gross per deal, 4 million dirhams of revenue. Your agents take 55% of what they close, that's 2.2 million gone. Portals, 480,000. Office and Ejari, 150,000. Licenses, RRA fees, broker cards and visas, 200,000. CRM, permits, accounting and admin, 220,000. Total costs, 3.25 million. Net profit around 750,000 dirhams, call it $200,000, minus corporate tax at 9% on profit above 375,000. Against a 400,000 dirham setup, you have paid yourself back inside a year. Not bad in this scenario. Now the realistic one, and it's the one the industry data actually supports. 5 of your 10 agents produce almost nothing and are gone by month 7, which is normal here. Your floor closes 30 deals weighted towards secondary sales and rentals, averaging 45,000 dirhams gross each, 1.35 million in revenue. Commission splits take about 740,000. Your fixed costs are unchanged at roughly 1.05 million because the toll booth does not care how many agents you have left, plus another 60,000 replacing the ones who quit. Total, around 1.85 million against 1.35 million earned. You lose about 500,000 dirhams in year 1. Payback period, there isn't one. And note that the small business relief that lets firms under 3 million dirhams of revenue elect zero taxable income expires for tax periods ending after the 31st of December 2026. So from 2027, the profitable years get taxed and the unprofitable ones still get audited. None of this is financial advice, by the way. It's education. Do your own research, and past performance in this market guarantees nothing about the next 12 months. If you found this useful, subscribe and drop a comment. Would you rather own the brokerage or own the portal it advertises on? Because here is what you actually bought. You did not buy a real estate business. You bought a monthly subscription to somebody else's website, a license that expires every year, and 10 strangers who own your client list in their phones. The land department takes 4% of every sale without leaving the building. You take 2% if the buyer shows up, if the deal registers, and if your agent hasn't already resigned.